So, September 2025, what a month for the Indian economy. On the one hand, you had these huge positive policy moves that looked like they could just turbocharge growth. But on the other hand, you had money flowing out, demand cooling down, and even devastating floods that threatened to slam on the brakes. It's a real tug of war. So, let's get into it.
So how do you even begin to make sense of all this? Well, in this explainer, we're going to connect the dots. We'll look at everything from government policy and global market jitters to, a massive weather event. By the end, you'll have a much clearer picture of how these forces are clashing and what it all means for the markets, for the banks, and for your money.
All right, let's start with the good news first and build the case for optimism. Because, September did have some seriously positive developments that got a lot of people really excited about India's growth story.
Okay, the big one, a huge simplification of the GST system. Now look, this wasn't just some boring policy tweak. The timing here was absolutely everything. By cutting taxes on essential goods right before the massive festival season, the government basically gave a direct shot of spending power to the entire economy. It was perfectly timed to get people spending, which is great for retail and for company profits. Second piece of good news, we saw a major strategic move in the capital markets. The New Development Bank, which is backed by the BRICS countries, announced it's planning its first ever bond denominated in rupees. Now this is a big deal. It's way more than just some new financial product, it's a massive vote of confidence. It tells the world, hey, we're confident in India. A move like this can attract all sorts of new investors and really boast the rupee on the world stage. It's a huge long-term win.
And to top it all off, even though the market was kind of meh overall, investors were still hungry for good Indian companies. We kept seeing deals getting done and real interest in new IPOs. And that's so important, right? It keeps the whole money-raising machine running for businesses that want to grow.
Okay, so that's the sunny side of the street. But it definitely wasn't all good news. Let's talk about the flip side now, because some pretty serious red flags popped up in September that threatened to stall out all that great momentum.
The first red flag, it came from outside India. Foreign investors actually started pulling their money out of Indian stocks. This is a classic risk-off move. Basically, when global investors get scared, they pull their money out of places they see as risky and run for cover. And when that keeps happening, it can put real pressure on stocks and on the value of the rupee.
And it wasn't just foreign investors getting nervous. The numbers from inside the economy started looking a bit shaky too. The Purchasing Managers Index, or PMI, is like taking the economy's pulse. And that pulse was slowing down. We saw that companies weren't getting as many new orders and they were slowing down on hiring. It's a sign that the momentum we saw might be fading.
So you've got this push and pull, right? Good news, bad news. And just when everyone's trying to figure it all out, something else hit, something totally unpredictable.
We're talking about devastating flash floods in Kolkata and other parts of eastern India. And let's be clear, this is way more than just a weather story. It's a financial shockwave. You've got businesses shut down, supply chains broken, and all of this happening during a huge holiday season. It puts incredible stress on local families and businesses, making it harder for them to pay back loans.
Okay, so we have all these powerful forces pushing and pulling in opposite directions. What does that actually do to the financial system? Let's break it down and translate it into finance speak. So take a look at this. It really shows that tug of war in action for banks, right? The good news is the GST cuts might mean more people taking out loans for cars and credit cards. The bad news? The floods and the slowdown could mean more people can't pay back those loans. See the conflict? It's the same story for stocks. IPOs are great, but foreign money leaving is not. For bonds, that new NDB bond is a game changer. But if foreigners sell off other bonds, that's a problem. And the rupee? Yeah, its profile is getting stronger long-term, but all this chaos makes borrowing from other countries more expensive right now. It's a real mixed bag everywhere you look.
All of this creates a really tricky situation for the people in charge. What's the big question they're facing now? Well, it's all about balance. How do you keep the economy growing while making sure the whole system stays stable?
Think of it like walking a tightrope. On one side, you got to push for growth. You do that with things like tax cuts. But on the other side, you have to watch out for risks, making sure the system doesn't break when it gets hit by a shock. If you lean too far one way, you risk a crash. Lean too far the other way, and you could kill the growth altogether. It's a really tough spot to be in.
So if you want to follow this story and see which way things are heading, here are 3 things you should absolutely keep an eye on. Number 1, what's the foreign money doing? Are investors coming back or are they still leaving? Number 2, how are companies actually doing? The next batch of corporate earnings reports and PMI data will tell us a lot. And number 3,
Watch what the big players, the RBI and the government, are saying and doing, especially about that new rupee bond.
To wrap it all up, September was just a month of total contradictions, wasn't it? You've got this really strong foundation being built with smart policies and strategic moves. But at the exact same time, you have these serious headwinds, from global markets to Mother Nature, pushing back hard. In the end, it's all going to come down to how well the economy and its policymakers can handle these hits.
And that leaves us with a really big question, and I'm curious what you think. When you look at all these different pressures, which one worries you the most for India's financial stability right now? Is it the foreign money leaving? Is it demand drying up at home? Or is it the unpredictable and powerful impact of these climate disasters? It's a lot to think about.